Okay, hello everybody, and welcome back to another video from the Investor Diary. In this video, we are not only going to talk about market structure as usual, as we have been doing for the last few weeks, but also I have added another tool, which actually I'm hoping to enhance the results. And I'm going to show you all, but the tool that I have added to my methodology is called the JS Climatic Volume. Those are volume candles. We are going to talk about how I'm using them and how they benefited me for the last couple of days. And I have been using this for a while. I have been studying it. And actually, the beginning of my videos, either on TradingView or on other platforms, I have talked about the usage of this indicator. We'll get to that. But first, to understand what really happened, we need to recapture the story of the GBPUSD, because this is where most of the things happened today, and the examples are there. So I'm going to show you the trades that went within the GBPUSD today. And I have done all that, and I disappeared last week because of the following results. So the beginning of April, it was beautiful here, and then I had this streak of losses from the end of April until today, actually. So, and today things got different because of that tool that I added. We'll look into it today. So I disappeared just to analyze what I was doing better. And when I do come with a video, it will be beneficial. I will hear myself talking about it and better understand it and see if there are any gaps in what I'm saying. And I hope it will be useful to you as well. So back to our GBP USD. So we'll capture the GBP USD from the beginning, and we'll take a quick look at it. I will not look at the details like I did in the past few videos. If you think this is going very quickly for you, a couple of videos ago, I was specifically talking about the outlook of the GBP USD, and I started from the 3 months exactly where I'm starting today. So you can take a look at those videos as well if you want a slower motion kind of thing and a slower explanation of that outlook. So going to the 3 months of the GBP USD, and we're doing that to see the direction and why, eventually to take a look at why I took those trades and the reasoning behind them, and how I added this indicator to the story and how it affected positively today the results. Okay, so on the 3 months, we can see that there is a bearish break of structure, and we have the inducement here. So the price, we're expecting the price to go up to hit the inducement, or something here, but at least for the first point we have the inducement, and after the inducement it will go down. This is the theory. Okay, so for now the price is going up on the 3 months. That's the assumption. On the weekly, we have the same drawing of the structure. We have a bearish structure as well. So we have the break of structure here. We have the high shared with the 3 months, the high of the range of the weekly, and we have the low of the weekly here. The low is not drawn on the 3 months because the inducement is not hit yet. So, and we have the internal structure of the weekly. And on that internal structure, something interesting happened where we have a reaction from an order block, which increases the possibility of, well, there was a reaction upward. It didn't quite get to the high. It wasn't enough to get to the high. So we're still waiting for the price to go to push up. This is the assumption, especially that also on the weekly, we have points of interest that the price needs to capture, or might want to capture, so as to get a strong way down all the way to the low, not to the low, not only of the weekly, well, this is the same low. The weekly low is the same as the 3 month low. So all the way here to get all the way to the bottom here, it needs power, and this power is in liquidities, and this is where the liquidity is. Either it will respect the weekly points, the weekly structure, and go down from there, or it will break the weekly, take the inducement of the 3 month or anything above here, and then go down. We'll see. But still, according to the weekly, the price will be pushing up. That's the story. Now let's get the weekly here, and now let's look at the story of the 4 hour. The 4 hour story is kind of similar. We have the low here, the high here, and we have a bearish as well, change of character this time. So this is the high, this is the low. The low of the range is shared with the internal structure as the low of the internal structure as well. So this is a high of the internal structure, and this is the low of the internal structure. Okay, so the internal structure is going up while the main structure of the 4 hour is going down. Therefore, the price, we are expecting the price to go up, but it need to be able to go up on the 4 hour, it needs liquidity. Now look at this. I am not sure where it got, what's happening. My only reason is a weak POI, which is this order flow here. Okay, this order flow here is the main reason why I would think, but I didn't take it into consideration because this order flow is embedded in this order flow, and this order flow has been mitigated many times. Okay, so I didn't take this into consideration, and I took into consideration this order block here at the right end of the range. Okay, so but the price does what it does, and it's going up now, leaving this potential entry not triggered. Again, if you notice the NA here, I have put this for observation, but NA meaning I will not take this trade. Why? Because I cannot afford it. This distance is more than I can afford on my balance with the demo account that I'm using. I'm still using demo. I will not use live. I have said this in all my videos. So now the story of the 4 hour as well is it's going up. Okay, and the reason, we have another reason, is that there is a reaction, as we said, there is a reaction from the internal structure of the weekly. This reaction, which is on the 4 hour, an upward reaction, is still happening. So this internal structure is because of that reaction. So will it go back to get more liquidity and then push up? This is something that we will see, but the story until now, the price is going up. So let's have this here with the possibility of returning to these points, okay, for more liquidity. Now let's go to the 15 hour, and let's take this away. Okay, so we are on the 15 hour here. What's the story? So the basic structure of the 15 hour, this is the low of the range, this is the high of the range. Okay, as you can see, the price went down and it's going up. With this going up, there is the main structure here. okay, which is until now, this is a bullish structure, okay? So we are assuming a bullish structure here. Let's see where that is. Yes. I have assumed that for whatever reason, there was a reason for this reaction. Therefore, I assumed, even though I didn't know, but since there is such a reaction, that means there is something here that made the price on the 4 hour make this behavior. Therefore, I treated this inducement as a break of structure and created a bullish structure on the 15-minute. On the 15-minute, I found this area where the price could go down to get liquidity for its upward push, but it seems to be that it will not do that. Up until now, this is the story. And in the internal structure, it was going up and down, gathering liquidity, okay, in a range, okay. So this behavior made, and I guess there wasn't on that time. Today is Wednesday. See, there was only something in the morning with the GBP, and today, well, this is my time, and 10 p.m. This is my time, not the US or any other. So yeah, this is about 4 plus GMT my time. So GMT, this would be 6 o'clock, 6 p.m. Okay, and it's still, we're still not there. So I don't know which of these created this. Even the timing is, there is nothing here. There is nothing that would describe what happened here. Okay, so in the internal structure here, we find that the breaks of structure were bearish. Okay, it caught the inducement and it was reacting upward. So this bearish structure, internal structure, is because the price was going down to get the inducement of the 15-minute structure and will go into reaction. Now this was in the last hour. This happened an hour ago until now, of course. Okay, basically I was with the story that the price is going up. So let's go now to the 1 minute where my execution is. Okay, let's start from here. This is the idea that I was testing. So these candles, these are volume candles, and this is the JS Climatic Volume, where the colored candle means it is a volume candle. It is treated as if it is a support resistance area. So the way to deal with this is to draw from wick to wick the rectangle, the area of the whole area of the candle. The way I am using it, there are three ways of using it. If the price goes up, that means Buy. If the price goes below, it means sell. And some people actually trade in between, but of course this is not going to happen on the 1 minute, but some people trade in between, within the rectangle. Okay, now I made my first trial here and it was a success. What was the reason for that? Okay, the reason for that is direction. The inducement at the time, the 15-minute inducement was down here. And I have a bullish structure with this order block. So I did a counter trend. I said that the price is going to get to this area at least to go up. So I took this candle here as a sell. And it was actually, usually I would take the entry um, from the wick, but this time the price already was up, so I took it on the spot so as not to lose the trade. So I took it on the spot instead of sell stop. I took it on the spot and went down. Okay, waiting for it to go down, and it did go down. So, and this is where it hit profit. Now the price actually went down, and I was waiting for the price to make a reaction here and go up. It actually did go up, but after closing this closing the entry with a loss. Okay, and this is where I was very, very upset. So I made another try. Okay, so we have a change of character here to the bearish side, but there was another bullish. So this is why I got really angry again. I mean, this move was devastating for me. Now we have again the 15-minute structure on the bullish side. So I said there is a rejection block here. Let's take it from here. And again, I don't take it on the same area. I take the 786 Fibonacci. So again, it just wicked my stop loss and went up to profit. Okay, so that was really that was amazing today. My next move, where was it? Why is it not drawn? Because I took another, wait, let's check it out. I took another volume candle. No, I took another volume candle on the Euro USD. So on the GBP USD, I had two structure entries. Both of them lost, and one candle entry. On the Euro USD, I took a volume candle and it was a profit. So by introducing, we will not go there. So by introducing the volume candle, because there was something happening with the structure, because my methodology is using the Fibonacci. Sometimes I won't get what's happening here. For example, there would be a POI here, but I don't want to take it because it's 50-50 chance. It's either it will take it or it will go down to the next POI. So I don't want to go through that, what do you call it, to that drama of trading, and I concentrate on the 786 Fibonacci. But sometimes it's irritating because I would see the price going up and up or moving in a certain direction without hitting my 786, and I lose the whole move because I am still waiting for the 786. So I thought if I find something like a candle like this and the price is moving in my direction, I will take that move. So this is how I introduced the volume candles into my methodology. And this is something that I will keep experimenting with and see what will happen. And I will report back to you. So this is it for today. This is the story of the GBPUSD again, but now with a flavor of how the implementation of the structure is happening with me and the introduction of the volume candles. Thank you very much and hope to see you next week. Bye bye.